CPI data report just came out, and I'm going to keep it super simple. What's going on, team? It's Ricky with Technical Solutions. I hope that you learned something new, and if you enjoyed the way that I broke this video down, please, all I literally ask you to do is to drop a thumbs up and consider subscribing, as I upload new videos every single day about stock market updates. So as many of you guys know, the CPI data report was released today. We actually live streamed the market's reaction. So if you want to see how the market reacted in a very positive way, feel free to watch today's earlier video. But why? Why did the market react in a positive way if inflation is still high? I'm going to be breaking it down for you. I like to break things down in bullet points, and I hope it makes it easier for you to understand. So this is the July 2022, which was released today on August 10th. For those that are unaware, this is all available on bls.gov/CPI. It's every prior month that gets reported. It's kind of like a prorated report. The month has to complete, and then it gets reported on the following month. It came in at 8.5% before seasonal adjustment, and pretty much what that means is we actually had an expectation of 8.7%. So we were previously at 9.1. We expected it to pull back to 8.7. That's what was factored into the market. And then when it comes in lower than expected, 8.5, that's good, right? Because it's showing that inflation is actually pulling back a little bit quicker than expected. The big concern also was core CPI. A lot of people thought that core CPI was going to come in higher than expected. The expectation for core CPI was at 6.1%, and it actually came in at 5.9%. So again, better than expected, lower than expected, right? Which means that inflation is coming in a little bit lower than what we thought it would be. For those that are unaware, core CPI does not include food and energy. That's why it's considered core, because whatever the Federal Reserve does, it could influence those specific industries, but it cannot influence food and energy. Again, the prior month was 9.1%, which pretty much just explains to us, right? If we were previously at 9.1%, which is the highest rate of inflation that we've seen in the past 40 years for the month of June, now that we reported the month of July and we showed to be at 8.5%, it's showing that inflation has finally peaked. This is why we saw such a positive reaction to the overall market, because it's progress. It's not that, oh my God, things are 100% better. It's just that hopefully every month or month after month, we can continue to chip away at that high inflation as it slowly begins to pull back. So one of the things that's kind of hard to understand is that there was no increase from the month of June to the month of July when it comes down to inflation. And this is why you see that there is a no change. It's 0.0, right? So last month we saw a 1.3% increase. This month we saw 0.0. This is one of the first times that we've seen this in the past 12 months. So again, better than expected. We actually expected 0.2 to be factored into July. So for those that are unaware of how to read this, there's a specific formula that you can look up on how everything is added together. It's not just going across and adding it. It has to be seasonally adjusted. But with that being said, they provide you the previous month, which was 0.5. That's what got dropped off because the CPI report calculates the past 12 months. So if we're adding the new month of July, we drop off and remove the old month of July, and then we just calculate from August moving forward. And you could imagine that if we drop 0.5 and then we add nothing, there is a big takeaway, right, from the overall inflation, right, that we were able to report this upcoming month. And then this goes into the details of everything, of like what were the biggest takeaways. For those that are unaware of how to read this, it's honestly very, very simple. All you look at is for the month of July, this is what was added. This is the change month over month. Also, the CPI data report calculates is, let's say that oranges were $1 last month in June. Now this report shows that oranges are $1.10. There's a net increase of 0.10, right? So this is where you see the net increase or the net decrease. You can see that the biggest contributors on these line items is energy, right? It has the most weight to this overall CPI data report. And you can see, as many of you guys have probably noticed, oil and fuel prices have recently been on a consistent decline 7 weeks in a row. and you can see that we saw negative. We actually saw a pullback in prices for this energy sector. So we could see that the energy sector saw a pullback of 4.6%, negative 7.6%, negative 7.7%, and negative 11.0%. And then we have utility pipe services right at negative 3.6%. So this was great because, as you guys can see, energy has, again, a lot of influence to this overall CPI data report. So it's nice to see that oil prices have hopefully finally peaked, and then we can begin to take away and drop in price month after month, which should lower our overall CPI. So I just wanted you guys to have a better understanding of how to read it. It's the month, and then every line item that is actually reported, and then it calculates it month after month of what increase we actually are seeing in either an increase or a decrease. So pretty simple, right? But yeah, I mean, that's really just it. That is why we are reacting in a bullish way. I'm actually quite surprised that we haven't continued to rally. The market's been trading sideways for, I mean, you have to think, this is when we began to live stream and we peaked at $36.40. It looks like maybe 2 hours ago we hit highs of $36.48. But ever since then, we've been trading sideways. So I'm not here to ever tell you what to do. At the end of the day, do whatever you think is best. But anytime that you see something consolidate or trade sideways for too long, it's showing signs of a resistance. It's not that it can't break above. It's just that, it just might not be worth trading. If you're a long-term investor, it makes sense on why you're holding. If you're a day trader, don't waste your time. At least I wouldn't waste my time watching paint dry for something trading sideways. I mean, the margin just isn't worth it. You need to understand that the action already happened, right? If there was continuous signs of an overall uptrend pattern, then great, but there's not. It's been trading sideways for the past 4 hours. So please be aware of that. Don't sell yourself an opportunity. Allow it to present itself when direction and momentum are in your favor. So we shouted that out with our Learn Plan Profit Group and made sure that they are aware that, things look like they're beginning to trade sideways. So maybe it's best to save those day trades and, lock in profits if you're up 7.33% on the day already. So I really do appreciate you guys' time. I hope that I earned your thumbs up in this video. I hope that you learned something new, and hopefully I made it easier for you to understand on this new CPI data report. Friendly reminder, I do trade live every single day right at market open exclusively with my Learn Plan Profit Group. You might have missed the sale earlier this morning, but we're running a $100 off Learn Plan Profit 2.0. So if you've been waiting for our biggest discount, this is a huge discount that we offer. It's $100 off, and it's the second link in the description of this video if you're ready to join our team and watch me trade live as soon as tomorrow. I appreciate you guys' time. Hope that I earned your thumbs up. Please consider subscribing, and if you have any questions, please, I hope that you know that I respond to all of my direct messages, and that's that first link down below via Discord. And yes, that is for free. Like always, let's make sure that we end the year on a green note. Take it easy, team.